What's up guys, welcome back to Endzone. Today we're going to talk about risk management. I don't want to waste your time, let's get straight into it. So, how to succeed investing? In my opinion, one of the key factors in investing, no matter what you invest in, if it is index, forex, crypto, whatever it is without a doubt risk management. Without risk management, you have a lack of structure, you have no plan, you have no consistency because simply you don't know where to get out or in or how much. And in my opinion, you're lost. You have already lost, in my opinion. Also, you need patience because you're risking a bit lower maybe, and that comes with time. So RRR, which stands for risk reward ratio. What are you risking for a reward? For example, myself, I have 1.3 risk reward ratio, which means I am risking X amount of money, for example, $100, to make 3 times that amount, okay, per investment. Let's make it easy and say I have $1,000 and I lose 2 trades in a row where I risk $100 every trade, which equals 10%. Then we are left with $100 and are minus 20%. If we win the next trade because of the 1.3 risk ratio, we have still made our loss back and end up with $100 profit, which equals 10% gain. With a good RRR, you can always recover in the market. Don't let the loss affect you. All right. So you need to set up a plan. First of all, you need to know your win rate. Calculate a win rate for one trading month minimum, for example 85%. And then you need to think, okay, what's the worst case scenario? Let's say it's losing 3 investments in a row, and the next question is, how much do I risk every investment and how can this affect me long term based on the capital I have? And I have an example of 3 different people with 3 different risk percent but same capital. For example, person A, he got $1,000 and risked 25% every investment. That equals $250. Worst case scenario, he lost 3 trades in a row, which equals 75% loss, equals $750. And he stands now today with $250, 25% remaining capital. And that amount of capital is pretty hard to recover from if he is going to continue risking 25%. Am I right? So it's not impossible, but he has to readjust his risk percent to come back, and he probably is a bit sad or psychologically ruined, so he needs to take a break, or who knows what happens, So if he even wins 5-6 rows in a row after that loss, he's pretty limited to how much he makes. We have person B. He got $1,000, risk 10% every investments. That equals $100 loss every trade. Worst case scenario, he lost $300, equals 30%, and got still $700 remaining capital, 70% of his capital. $700 is a pretty good amount of capital after that unfortunate loss to come back from. So, with that being said, let's say you win 3 investments in a row with 1.3. You have made $900 and covered the loss, which gave you a final result of $1,600. That equals 60% gain. That's pretty good. Person C have $1,000 and risk only 5% every investment. 5% of $1,000 equals only $50. Worst case scenario, he lost 3 investments in a row. That results only in $150. And he got a remaining capital of $850. $850 is a very good amount of capital after that loss. So with that being said, let's say you win 3 investments in a row with 1.3 RRR. You have made $450 and covered the loss, which gives you a final result of $1,300. That's 30% gain, and he's not even been affected by the losses because they are so small, right? So it's much easier for him to make this gain. So pick yourself a person You might not like the amount of money you make without all risk. However, if you are patient, you will both build capital and knowledge, then money will come by itself. Know that money is emotions. The higher the risk, the more emotion is involved. The more emotion is involved, the worse are your decision. And don't put yourself in that spot. This is not to get a rich quick scheme. Yes, you can build a good amount of money in a short amount of time in the future. However, in the beginning, it will not be like that. Stick to the long game, learn the game, and then you can play the game, right? The greed effect. Without a plan, you will get lost in the market, all right? I strongly recommend to let the trades run until they take profit and stop loss. Therefore, you have structure and you won't freestyle in the market. With a good RRR, you will never go wrong with consistent runs, no matter if you let them hit stop loss. Because if you let them, let's say, for example, you go out of the market a bit earlier than your stop loss, right? And then suddenly it went back up before it hit your stop loss, and then next time you let it run extra. When you ruin your structure, you're gonna ruin your progress, your long-term success in trading, because it requires structure, it requires a plan, it requires risk management. When you're freestyling, you're chasing the market, and the market gonna ruin your mood, ruin your bank account. All right, stay to the plan. Revenge trading. Since we are sticking to our person, and last but not least the plan, it's quite easy to stay away from this unhealthy action. Without it's quite easy to think you have to make your money back in the market by increasing risk with lower capital than first, and have a huge chance of burning your account. For example, person A, remember him? He got $1,000 and risked 25% of his capital every single trade, right? And after 3 losses, he lost $750, which equals only having a $250 left, right? Yeah. And if he gonna think that I'm gonna make my money back by increasing my risk to, for example, 50%, it's a pretty high chance he's gonna burn his account, and we don't want to do that, right? So don't let these emotions kick in. Lower your risk. Don't let your emotions take the best of you. We have 4 trading factors, fear factors. All right, we have number 1, people are afraid to make mistakes. People are stubborn. That's the best way to explain it. People are stubborn. They want to be right, and when they are wrong, they refuse to accept it. So yeah. Number 2, lose money. People are afraid to lose money. People risk money they don't have, or risk more than they are comfortable with, and that equals in a fear factor. Number 3, miss opportunities. People believe that this trade is the trade that will give them a Lamborghini, This is the trade that will turn my life around, when there is opportunities every single hour when the market is open. So drop that factor. Number 4, leave money on the table. Take your money, take your profits, and get out of the market. You have to overcome these factors to be part of the 10% winners. Simple as that. All right, and that comes with time, of course. So thank you so much for your attention. I hope you learned something new, or gave you a fresh reminder of how important risk management actually is. Take the market with a strong control though. If there is any question, comment down below. Make sure to like the video if you enjoyed it, and subscribe to be notified for more. Last but not least, make sure to share with someone who needs it. All right, take care.